When I first started trading, I thought market volatility was my enemy. Those wild price swings would keep me up at night, watching my investments bounce up and down like a roller coaster. But over time, I've learned that volatility isn't just something to fear. It's actually the heartbeat of the financial markets. Think about it this way. Imagine you're surfing. The calm, flat ocean might feel safe, but it's the waves that give surfers the opportunity to ride. Market volatility works similarly. Those price movements that seem scary at first, they're actually creating opportunities for those who know how to navigate them. Let's break down what market volatility really means. It's those rapid price changes we see in stocks, cryptocurrencies, or any other financial market. One day Bitcoin might shoot up 10%. The next day, it could drop 15%. A company releases disappointing earnings, and its stock plunges. Global tensions flare up, and oil prices spike. But here's what's fascinating. These movements aren't random chaos. Understanding these drivers is like having a weather forecast for the financial markets. Now, I know what you're thinking. That's great, but how do I protect myself from getting wiped out when markets go crazy? Well, successful investors and traders have developed several strategies to not just survive, but potentially thrive in volatile markets. First, there's diversification, the age-old wisdom of not putting all your eggs in one basket. When some investments zig, others might zag, helping to smooth out your overall returns. Then there's hedging, which is like buying insurance for your investments. And let's not forget about stop-loss orders, those automatic sell triggers that can help limit your downside. But here's what I found most interesting. Some of the most successful traders I know actually love volatility. Why? Because bigger price movements can mean bigger opportunities for profit, if you know what you're doing. Of course, the flip side is that losses can be bigger too, which is why risk management is absolutely crucial. I've learned that the key isn't to fear volatility, but to respect it. It's about understanding that markets are like the ocean, sometimes calm, sometimes stormy, but always in motion. The most successful investors aren't the ones who try to fight the waves, but those who learn to read them, respect them, and ride them when the time is right. Remember, every market correction, every crash, and every boom in history has eventually led to new opportunities. The key is staying informed, being prepared, and having a solid strategy that accounts for these inevitable market movements. Because in the end, volatility isn't just a risk factor. It's what makes markets work, creating opportunities for those who are ready to seize them. So next time you see those market swings, try to view them through a different lens. Yes, they can be challenging, but they're also what make the financial markets dynamic and full of possibilities. After all, without volatility, there would be no opportunity for growth, no chance for profit, and honestly, the markets would be pretty boring.